What I'd like to do is get back to some commercial lending issues, particularly focused on small business and that sort of thing. We've come a long way since just the beginning of this, as far as I can see. And I'd like to get some more feedback about what specifics information does a lender require? What would you require of a borrower as far as specific information, financial or otherwise, to support the loan?
I think one of the most important things to really focus on is to be able to provide really good financial statements, quality type financial statements. For example, if you're a construction company, you want to be doing your financials on a completion basis. For your particular business, you want to make sure that you're providing good financial reports. I don't know about the bankers, but it drives me crazy to see financials that are unreconciled and to see negative numbers where they shouldn't be negative numbers.
A balance sheet that doesn't balance.
Oh, a balance sheet that doesn't balance. That sends a message that you don't want to send. And it's important that you understand your financials as well. Sometimes we'll get a customer who doesn't keep track of things along the way and only just turns everything over to their accountant at the end of the year. That's a difficult scenario for us, and I assume it is for the bankers as well. Because how do you know how you're doing, where you're going? What if you have to make an adjustment and you aren't paying attention to those financials and what they're telling you? Because if you let too much time pass when you should have been making some kind of an adjustment, it's really hard to turn the ship around at that point. And so that scares a lender. It scares me. If someone is not preparing financials for themselves, forget about the lenders, for themselves, and using that as their gauge and looking at them daily, weekly, monthly, and keeping track of what you're doing. So to me, financials are critical, that you understand your financials.
To elaborate what Kathy just mentioned, I would also say, you as business people, you have to wear a number of hats. But whoever is managing the financial piece of your financial reporting, make sure they're qualified. I don't know how many times I meet with a customer of mine, and they're having their office manager that's putting things in QuickBooks. And that's great if there's a certain level of competency there. But oftentimes, the reporting that they generate, like Kathy mentioned, the quality is very, very poor. And when you hand over a balance sheet that doesn't balance, or where you're showing negative numbers within the assets section of the balance sheet, it's difficult to help the customer at that point. And you point these things out, but it's not a quick fix. And oftentimes, it's very difficult for them to go back and make these corrections. The other thing I would say is just know that depending upon the type of industry that you are and what your loan request may be for, certain financial information, additional financial information is probably going to be asked. For instance, if you're looking for a larger line of credit, and I'm going to say over $1 million, which we don't see very often here in Valencia County, and you are a construction company, well, in addition to the normal financial statements and tax returns that we're going to be looking at, we're going to want to look at your accounts receivable. We're going to want to look at your aging reports, how people are paying you back within the time frame. And then also, we might even want to go ahead and look a little bit further as far as what jobs you have in process and where you're at on those jobs. And so it's not that lenders like to torment business owners when they come in and want to borrow money. It's more of having to document things and support the reasons for approving the request. Because we're very motivated to do so, believe me. It's not, we don't enjoy saying no. At least the majority of us don't. Jacob, maybe.
Whoa, you gonna let that one go?
No, we're not even close to that. You know, one thing and this is more for Dave, because one thing that I don't like to see is pro formas and projections coming into my office showing 30% growth for the next 5 years. I mean, give me a break, you know, nobody's seen 30% growth for the next 5 years. So it demonstrates to me that the customer doesn't really understand their market. Unless there's some sort of product that doesn't exist in the world and it hasn't been marketed ever, it's not going to see 30% growth every year for the next 5 years. I'm sorry. I mean, I hate to be the negative Nelly of the group, but I don't like to see that. I look at it and go, this person's not serious. They must think I'm stupid because I know they're not going to do this. And you know, when I see realistic projections and realistic expense figures and realistic profit margins, realistic return on equity, I feel very comfortable with that. That's very, very conservative types of numbers. But when I see those that are overzealous and they think they're going to be millionaires, I'm sorry, you know, I'm not interested. And just because I don't want to be part of that ultimate demise.
Bring up a good point about, let's just call that the red flag. Are there any other red flags that you all, pet red flags that you just look at?
You know, I was going to bring up one other thing here that's kind of a piece that we haven't talked about, is that, so if we're making a loan to a business now or to a piece of real estate that's cash flowing or something along those lines, when I was doing this job for First Community Bank 5 years ago, a lot of the deals I would make, I would call them transaction oriented, in that, all right, so if this piece of property is subdivided and the lots are sold off, here's the amount of money that this borrower is going to make. Now in this day and age, that's just one piece of it. The other piece that has come about because of all the things that happened, all the foreclosures, all the short sales that have happened over the last few years, is that besides just the business itself or the particular thing that we're lending into, what we look at now as the other piece is called global cash flow. And that means if you own that business 100%, then we're going to look at you and see everything that you have going on. So if you have more businesses, if you have more LLCs, if you have other projects going on, we're going to look at everything on the consumer side as well, all the debt that you have. So if you have a huge personal mortgage out there, that all gets factored in now too. So you might be cash flowing on your business or the particular project that we're looking at, but you also have to cash flow on a global level as well now. And that's it. That's just another piece of it now. There's no getting around that. Where I work, both those have to show the cash flow that we need to do the deal.
Excellent.
So it's a little different now.
Any other red flags?
Another red flag for us is the dreaded T word, taxes. Gross receipts tax, payroll taxes. We're seeing more and more borrowers who are delinquent on those two types of taxes, and that's such a slippery slope. Obviously, that indicates a cash flow problem. That's a huge red flag. And, you know, I don't think anybody starts out with the intention of, oh, they're, you know, that they want to do something, you know, they really shouldn't be doing with regard to those two areas. Oh, I'm going to replace that money. I just need to borrow it for a little bit, and then I'm going to replace it.
Mm-hmm.
It just tends to snowball, and then it just gets out of control. And so that's one of the first questions I actually ask any borrower. And I have made some loans where they've had some delinquent taxes. If they've gotten them on payment plans. But I have to say that those still tend to be pretty difficult loans. If they're having that kind of an issue, they've got other issues, generally speaking. So I would just encourage you to not start down that road because it's very difficult to come back.
I think another red flag, oh, I'm sorry.
That's okay.
No, go ahead.
I think one thing too that borrowers need to be cognizant of is filing the way that they file their tax returns. A lot of times, countless times, what I see from borrowers is that, you know, they're making all their mortgage payments on time, they're satisfying all of their liabilities ongoing every month, but then you put their tax return under analysis and no cash flow shakes out of it. I mean, nobody wants to pay, nobody enjoys paying taxes, and most people, all of us, you know, we file our taxes in such a manner to reduce our tax liability. Right? That's human nature. But what you have to understand as a borrower is that your banker, your loan officer is going to use that same tax return in order to prove cash flow. So it's kind of a double-edged sword, but you really can't have it both ways. I mean, if you anticipate borrowing needs in the future, you know, you need to make sure that you show cash flow from your business and from a global perspective. What was mentioned earlier with regards to a global analysis, a lot of times too, I think what borrowers want to do is they want to maybe form an LLC or some entity, and they want to take out a loan under the business name. That's all fine and good. We'll be happy to do that, but any person that owns at least 20% of that entity, of that business, is going to be required to sign on as a personal guarantor. That's where the global cash flow analysis comes from that he had talked about. And it's not just the bank's risk adverse, you know, notion to do something like that, but even your SBA guarantees will require that. They'll require that any 20% business owner be part of the loan transaction as a guarantor. So yeah, just getting back to the cash flow issue, it's something, yeah, you don't want to pay more than you have to, but if you anticipate borrowing needs, you know, keep in mind that the banker is going, the loan or the loan officer is going to use that same tax return in order to prove cash flow.
That'll also impact you in the event that you're planning on selling your business, because that's something that would be reviewed. That affected a transaction that I'm currently in the process. We were still able to do the loan, but it affected the loan amount as far as what we were able to do. And it's required the seller to carry a note on the back end where it'd be between my borrower and them. Another high risk or red flag that I just wanted to mention was rapid growth, rapid change in revenues. If you're not able to maintain margins, bigger is not better. Because I've seen a lot of customers, and I'm sure you guys have too, where you're seeing that their revenues are growing very, very fast, but their margins are shrinking. And so there is that certain sweet spot that you need to be at, and not just think in terms of more sales are better.
When you get an applicant for a real estate or a business loan, and you respond with a set of terms, are the terms you're laying out pretty absolute, or are your terms somewhat negotiable? Can a customer say, well, I don't want to have a balloon, can I do this or so? I mean, how negotiable are your terms when you first put them out?
Well, I think it depends upon the type of transaction, and it depends upon where you're at in that stage of that request. We're having our first meeting. I'm giving you maybe what I would refer to as a general terms letter, saying that you're looking at this kind of structure, amortization term, rate. This is what your payment would be. You know, that's very early on in the process. I haven't looked at financial information, haven't pulled credit. If we're later on where we've already done that, and I'm giving you a commitment letter, then at that stage, those terms, that's what we're offering at that time. They're set, that's what we're going to deliver, assuming that it's not contingent upon getting an appraisal. Title work and things along those lines, where if the appraisal comes in short, that could impact our ability to do the loan.
And I take somewhat of a similar approach, but mostly when I meet with my customers initially, I'll ask them, what do you want? Well, I want 100 years at 0%. Well, yeah, no. And I want 30% in 1 year. That's what I want. So really, what do you want? You know, and let them tell me what they want. And many times I'll say, yeah, we can do that. Or, no, we can't do that, but we can do it this way and this way and this way. Will this work for you? No, that won't work for you. What will work for you that's close to this? in the environment that I'm in, I have that ability to be able to change those terms within policy constraints and within the rules of what can fit in the box. But it doesn't always fit in the box just perfect. It's not that big of a deal normally. If I can justify and mitigate that risk and demonstrate that I want to do this for this guy because this will help this project succeed, then it's a win-win situation. So I don't know that, at least from my standpoint, nothing's set in stone. One thing that we look at real closely these days, and I know a lot of the other banks are looking at, are covenants on their loans. And covenants will go back to what we were talking about here, where she said people aren't reviewing their financials. It's going to force people to look at their financials on a regular basis and track what they're doing. We in some cases, we'll put covenants where you have to have a minimum debt coverage ratio. And we'll put covenants where you have to have a minimum fixed charge coverage ratio. That's a whole new ratio that bankers, we didn't even know existed 3 or 4 years ago. That's pretty new. It's a fixed charge coverage ratio. And it's a ratio of what your income can support against your fixed charges, because we all know that fixed charges are not going to go down, are they? You have your same loan payments to those mortgages, and you have your variable costs are your utilities and so forth, but your fixed costs are your property taxes. We have covenants that we might put in place on our customers that says you need to maintain this minimum fixed charge coverage ratio. It forces them to look at their financials on a real regular basis and understand what their business is doing. It's not so that I have something to pull the rug out from under them. It's more as a measure to help our customers really look at their business. Now, I don't do that for the $50,000 revolving line of credit for the small mom and pop operation. That's just sometimes not feasible to put a fixed charge coverage ratio in there. But for our bigger, more sophisticated deals, we are putting those in. Those are big. And that's something new to a lot of people. It was new to me within U.S. Bank. We didn't look at fixed charge coverage ratios within First Community Bank.
Mm-hmm. Roy brings up a good point on the tax returns, because that is one of the issues that going outside of the existing bank we already have, who has our payment history and all the other things, who have something else to take into consideration in that. We have 100% financed properties that we get mortgage interest deduction on, that have only aged 4 or 5 years. So part of that business plan is obviously being able to recycle that money back in against our income. For years with really good tax accountants in New York that we still use, that did our work for us when we had companies in New York, we pay very little tax because we have so many opportunities to take credits. Self-employed, so all of my expenses are deductible. Don't have any W-2 income. All W-9, kind of income in there. So everything's deductible. So it makes it difficult when you bring that in, because first of all, the tax return's this thick. And actually, you've seen ours because we just had them recently. I mean, they don't show much income, which is, the objective in paying taxes, I thought. To use every legitimate deduction that's out there. That's why deductions exist. Oh, yeah. Yeah. But, with your existing mortgage holder, they have other evidence to look at as well as that, and it doesn't seem to make any difference.
To kind of bring this back to a full service situation, it's a comment made at the very outset about growth in Valencia County, and particularly the feeling was, or the implication was, that Los Lunas has probably the advantage there as far as the growth of businesses and that sort of thing. There are, and I see from a little bit different perspective, and I'm kind of entering into areas that you guys step into all the time. But I see the growth in that area of the service-oriented and the small business in Los Lunas particularly. But Belen is a lot stronger in terms of the industrial aspects. There are some outstanding companies in the Belen area. What I would consider for Valencia County, larger employers and certainly a higher gross income, that are struggling in terms of not necessarily in sales, believe it or not, but in terms of finding qualified people to work for them. And the training of these people to keep their businesses going. So their set of problems is a little bit different than what we see as perhaps where the economy is headed. Both aspects find themselves in trouble one way or the other. But I think Berlin is experiencing a different kind of challenge than we are in Los Lunas. Do you all see any of that at all? Do you see any opportunities for larger lending opportunities out of the Berlin area?
I think that's how the only way we're going to grow our economy in this market, because we could sit here and open up all the burrito joints and all the Chili's and all the Applebee's and all the Home Depots and everything in the world, but unless we figure out a way to bring money into our community, we're not going to grow. So yes, I see that there's some opportunity there, especially in the industrial park for Belen. There's a full-blown rail spur there. There's 3 interstate exits which can be taken advantage of. Still need grant access to the west side of the interstate. But you know, we say shop local, and yes, I truly believe that, and that's one of my keys in life that I try to do. But we can still hear shopping local and passing the same dollar back and forth for the next 100 years. And it's not going to do any of us any good at the end of the day. So yeah, as a bank, we're looking for those opportunities, and we have the ability to finance those big projects. And I'm going to delve into something probably a little controversial, so please don't shoot the messenger. Wherever that hospital lands, we have the ability to finance that hospital as a bank. We can do that deal. So those are the deals that we're looking at, and those are the deals that I want to look at as a bank, so that I can bring money into our economy, new money, not. I mean, once again, I want Tom to be very successful. We can sit here and pass that same dollar back and forth the next 100 years. And we could open up, and this is nothing bad towards Home Depot or Lowe's, but that's not new money coming into our economy, folks. We're sending money out of our economy every time you spend a penny there. Granted, some of it stays here in the form of wages and some grocery receipts, taxes, and all that, but the majority of it's leaving. So we've got to figure out a way. Marilap was a perfect example of money coming into our community. Solo Cup was a perfect example of money coming into our community. It's not United Destiny, what's it called? Sud Kami. That's a perfect example of what we need to promote within our community, and us as bankers need to be looking for those opportunities to get those buildings financed, and get those operations financed, in addition to helping our small businesses.
You mean
Cisneros.
Sud Kami. Cisneros is a perfect.
Cisneros Brothers, Neil Heiss and Semco.
Yeah.
Good paying jobs as well as money staying in the community.
And it's new money coming in. Every time
yeah.
they build one of those crop crushers and they ship it to Switzerland or
The money comes back to here.
They're sending brand new money into our little
right.
market that did not exist here yesterday. And so, we got to really, as bankers and as community members, look at those opportunities. How we can build all the strip malls in the world and bring in all the Dollar Generals we want, but it ain't going to do us any good at the end of the day.
Well, that leads right into a brazen commercial for me, right here. As I mentioned, I'm the president of the Greater Berlin Economic Development Corporation. With no offense to Ralph, in many ways that could be considered the Valencia County Economic Development Corp. Because Greater Berlin, Greater Los Lunas, it's all the same. None of you is represented on our board. And for some reason, that is, and I'm sort of new on the board, only been there a couple of 3 years. That is without logic. That at least one of you, through your public participation rules that most banks have, community participation, no one is on our board. And I invite any or all of you to check us out.
Ed will sign up.
Pardon?
Ed signed up for 71.
I'd be happy to attend one of your next meetings.
Well, attend. We've occasionally had staff people from you, because it's just up the elevator. But we'd like someone from a banking institution to be a part of our board. Simply to balance out and round out what we can do to work with the greater community to gain economic development, bring in those new dollars, and create a more successful community now.
By all means, give me a call. I'd be more than happy to talk to you about that.
David, do you agree with what was said down here as far as the potential of the Berlin area for industrial expansion?
I think that is really where, one of the avenues that Berlin has to strongly look at. There's also the housing issue, there's also the retail issue, but Berlin is perfectly situated, as was said. You know, with rail spur, if the Rancho Cielo project is going to follow through sooner rather than later, I think eventually it'll happen, but if they can get that intermodal development going there, and they can get an anchor tenant or two to support the intermodal, one of the items they've discovered is, for example, this Walmart distributing place here, it only distributes food and food products. Where does all the other Walmart stuff get distributed from? Good question. Who's working on it? Well, Jim Wood is working on it. I don't think I'm saying anything that isn't out there. But there's all kinds of distribution that is partial in the central New Mexico area. A lot comes out of Denver, a lot comes out of Dallas. Once the intermodal yard is in, that makes it shippable by train to be offloaded for greater distribution. Stuff coming in from the West Coast, $4 trillion a year passes through Berlin in the way of goods on its way to Chicago or Dallas or
You're
whatever.
preaching to the choir here.
Yep.
I think
I know,
everybody
but the thing is,
understands what passes through, and none of it falls off the.
but what we need is we need someone from this industry to be a part of the economic development process.
Right.
And it's not just one-on-one picking up the phone, which Ralph does on a regular basis, and may talk to any of you to say, hey, here's an opportunity, do you have a client, and fit. But we need to work together. We need to look at the broad capabilities, the hospital, of course. And again, I don't want to get into a kicking match, but what or where, in my background in land economics, a hospital anywhere in Valencia County improves the value of everywhere in Valencia County. After that, the decision has to be based on what works. But, you know, I'm appalled by the fact that it's been however many years.
Well, there's a lot of
Forgive me for getting up.
other issues that
Yeah.
that have from time to time raised their heads that stomp on the balloon, unfortunately. And I've only lived down here for a little over 3 years now, and some of the things that we see are extraordinary in their short-sightedness. And if there was a way.
Well, there's an amen from the entire room, isn't there?
Well, I'm not going to get up on a soapbox, but I'm just saying there's so much value in our community that we can take advantage of, that we can promote, that will help Valencia County if we could just stand back, clear the air, and just say, all right, what is it going to take to get this thing done? And I bet you we could find a tenant if we all had that right attitude for that Burlington Northern complex out there that will turn this whole area into a lot different kind of opportunities for all of us. You guys wouldn't be wrestling with $25,000 loan request. You'd be wrestling with $250 on up, easily. And I wouldn't have to trying to figure out how to help that one baker that wants to bake bread or cookies necessarily, which is fine. I'm just saying, there's so much that we can do as a group, and I'm pleased, Ed, to hear you say that you want to reach out and get involved, and I'm sure David's going to take you up on that, that's for sure. What else can we talk about here this afternoon, folks? Because, you know, this type of conversation about lending and loans and what do you need and how it is one of those things that some people would say, well, you've gone too far already, but others would say, hey, I can think of 3 more things that I want to talk about. So is there anybody here that wants to talk about 3 more things or 1 more thing? Well, I want to say thank you very much. We have what I consider an expert panel here and some very fine banking talent, and I applaud each and every one of you. Thank you very much for your time. And although we're sparse, we're intent, aren't we? Oh, yeah. And I think that we will pursue this type of thing in the future. Ralph, do you want to comment on that, or you?
No, we're looking at probably having another one. Hopefully we'll get more attendance at the next one. This is a great forum. You guys are expert. We just need to bring more people out to the next one. That's my only opinion.
And if you don't mind, I've got a little evaluation, and I'm of this meeting, and I'd like for you, if you don't mind, before you leave the front door, to do this, because it'll help us, Ralph and I, and everybody else that's involved to, thank you. It'll help put together more successful summits and that sort of thing.
Are you sure you trust me with this?
Yeah, I trust you completely.
Okay.
Well, you all, thank you again very much. I appreciate it. And stick around and talk to these folks if you want, and exchange cards and that sort of thing, because that's what I'm going to do right now.